Alright guys, welcome back, and especially a warm welcome to our new students that have just joined. So, we have the government bonds, the yield prices, so this is the triad here in front of us, the 10-year, 30-year and the 5-year. This looks a bit of a mess, so this is going to affect the analysis tonight because I don't really know what to expect at the minute. I need more information. And a lot of the reason for that is what you're seeing here in front of you. The bonds look like they're in consolidation at the minute, and generally when they're in consolidation, it means we're usually going to see that in the dollar index. And when that's the case, if you want to, then this is where you look for the crosses, where you're looking at relative strength between a weaker pair and a stronger pair and pairing them together. Looking at the three of the averages here, you can see how we've gone lower here on the 30-year, whereas the 10-year and the 5-year are failing to go lower. We are seeing the 5-year make new highs up here if we're looking at the bodies. So this is a mixed market, and this makes technical analysis just a little bit harder, trying to get a read on price. Looking at the 30-year, we've made a lower low and into this order block, this fair value gap, and we're inside of this sell side imbalance. So this has become a balanced price range. We've gone sell side, buy side, spent a little bit of time in here. If we are to break below this sell side imbalance, then we are likely to attack the liquidity down here because we have quite a nice trend line going and the relative equal lows which I've highlighted a number of weeks ago. Unless we find support over here and get back above this balanced price range, you can see how we're currently at that consequent encroachment of this sell side imbalance at the minute. I'd favour lower prices just because I think that the bonds are currently in a longer term consolidation. So I think we're just going to be going back and forth, up and down, taking buy side liquidity, coming back down, taking sell side liquidity, and coming back into the range. Based on the current geopolitical and macroeconomic conditions that is happening at the minute, this is sort of expected, right? There's a lot of uncertainty going on right now. And I've spoken before about how the dollar index no longer has the backing of Saudi oil, and that isn't good for the dollar, right? And if the dollar does take a nosedive, it's going to be bad for obviously the US economy in terms of inflation and stuff, because the buying power of the dollar is not going to be as strong as it used to be, right? What worries me, and this is a little bit tinfoil hat, I am ICT student, right? America have a lot of weapons, and you're going to have to buy those weapons in US dollar, right? Wouldn't it be ideal that a war breaks out and US weapons are being sold? I mean, of course I'm speculating, but when you're going to see consolidated markets, there has to be something that gives way in order for the markets to move again. And with the state of things at the minute and the tension around the world, in my opinion, America want a war, right? Every time there's an economic downturn or there's a recession, they start picking fights, right? I hope to God I'm wrong, but since you're here in this mentorship, I want to give you my obviously inner dialogue and things that I'm currently thinking about as I'm looking at the charts. Why are the bonds in consolidation? How is that going to affect the dollar index? How are the geopolitical problems around the world going to affect the forex market and the stock market? Right? So these are all questions as speculators that we have to know and ask ourselves. We are in worrying times, and I think it would be wise of us to take precautions. You know, I know ICT is a little bit crazy, but he talks a lot of sense. So when I was in his private mentorship and he was saying the same things about the market back then, I mean, just before COVID, he said the markets aren't moving right, and we were in consolidation with the bonds back then as well. And he said something looks like is going to give way, and then literally a month later, COVID hit. So he's been talking about this war situation for a while. Economically, it makes sense for America. We have been in black swan territory for a number of months, and we could have one of those at any moment. So this is why right now you want to really tread carefully, and you don't want to do stupid stuff, right? You don't want to over leverage, over risk. The dollar index. So we have the weekly chart here in front of us. And last week I said we had ran through this balanced price range, and this could potentially act as an inverse fair value gap to send prices lower below the sell side liquidity down here. That's what I would have favored. But I also outlined the reasons why we could have had a bounce, which I'll get into when we get into the daily time frame. At the minute, I'm looking at this low here, and the open of this up close candle is our order block, and we've dug into that slightly and then came back and closed around consequent encroachment of that balanced price range. We have a small fair value gap above the market over here, which sits around consequent encroachment of this sell side imbalance over here. So this is a balanced price range. We've worked this level many times. In theory, this should hold as a brick wall really and send prices lower. Is ideally what I'd like to see, but I have a feeling that we're most likely going to consolidate given the state of the bonds at the minute, right? Looking at the daily time frame, I said last week that we were likely to come higher into this distribution block over here. I wanted to see us stay below the consequent encroachment of this sell side imbalance over here. The bodies did respect that level. They weren't closing above it. And I said we could reach all the way to the discount end of that weekly balance price range. We did that, and then I said the next area would be below these lows down here and into this buy side imbalance over here. And that panned out really nicely. And then on Friday, we had this explosive move higher, right? Now, again, last week I said to you that because we weren't seeing the bonds wanting to go lower, I said we could come into this area over here, and we have these three down close candles over here as an order block with a fair value gap, and it could come lower just to go back higher again. I didn't rule that out last week, right? So on Thursday, we dug into this buy side imbalance and back into this volume imbalance over here, rejected that and sharply moved away, breaking structure above this high. This sell side imbalance has now had buy side delivery back through it, so this has become a balanced price range, right? I'm looking at the mean threshold of this distribution block, and that overlaps with the consequent encroachment of that balanced price range as well. And we also have this down close candle over here. So this will act as a reclaimed order block, and I'm looking to see if we can stay above the mean threshold, find some support over here, and then potentially move higher up into that weekly sell side imbalance in this grey shaded area, right? At the minute, we're just consolidating around this weekly fair value gap. I want to see us close back above the weekly balance price range, potentially reject from this area, come back down and find support, and then continue higher to attack these highs up here. There's a lot of buy side liquidity resting above these highs, so that's a possible scenario. From where we are, I would still rather see lower prices, right? But if the divergence on that 30-year yield holds, and it is at a support level as it is, that will move higher and the dollar index will go higher with it, right? The bonds have been consolidating as the dollar has been allowed to drift lower. And I said that it could go lower, clear sell side liquidity, find support, and then continue higher. So at the minute, we're sitting around equilibrium of the dealing range low to high. I want to wait for more information, right? Monday hasn't been much help for us at the minute. We're still stuck inside of this balanced price range. Tuesday, Wednesday, we'll have more higher impact news, and that will allow the weekly direction to unfold. So I'm sitting on my hands until I get more information. What I have just said to you there and how I have broken down that narrative is extremely important if you want to do this as a long-term career. You have to know when to sit on your hands, right? When I first started learning how to trade, I wanted to be in absolutely every single move, right? I came to learn that the times where I'm unsure, which usually is going to be two things, is if I cannot find a definitive direction, either higher or lower, then I want to sit on my hands and wait for more information, or I'm seeing the bonds move in consolidation, or there's a mixed market in some case, right? Right now, this could still potentially go either way. We've come into the weekly order block, but we've also seen a break in market structure after taking the sell side over here. So at the minute, for me, this is low probability conditions. Coupled with the bonds, it looks like it potentially could continue higher, if I'm honest with you. I'd like to see lower prices just because of the longer term narrative that we've had. But this price action here is now made me less bearish on the dollar index, right? If we didn't have this move on Friday, I would have expected the consequent encroachment of this balanced price range to hold back into this distribution block and then run lower to attack the sell side liquidity. That's what I wanted to see, but we didn't get that, right? So now we have to sit on our hands and wait for more information and see how price is going to react around this weekly balanced price range. Are we going to get back above it? And if that's the case, again, it'll hold as an inversion level, and then we're likely to get back up into this fair value gap. And then we want to assess again, are we going to see a sharp move away from this level? Or are we going to go through it, come back down, and will that hold as support, right? I want to see if price can also get back above this volume imbalance. Last week we closed below it, and today we haven't actually had any move above this at the time of this recording either. So this volume imbalance is keeping price at bay at the minute. Moving over to the euro dollar. I said in last week's video that we're likely to come lower into the high of this up close candle, which is our accumulation block, which also sat around consequent encroachment of this buy side imbalance over here. I said I wanted to see the lower portion left open, and I wanted to see them run higher, right? The buy side liquidity up here, which sits below the weekly volume imbalance, was my buy side objective, and it still is. I don't think we've done enough to completely shift gears at the minute. Like I said, we need to see what the dollar index is going to do, so we need more information. We're sat around equilibrium of this price range, right? And I've said this many times already around equilibrium. We can see a seek and destroy profile play out, right? Now, by itself, this isn't enough to say that we've had a break in structure here and we've completely turned corners. We've just come down to rebalance, take sell side liquidity below this low, and we've come into a new week opening gap and back into this accumulation block, just digging a bit deeper. Price has rejected from that and closed back above the consequent encroachment of that buy side imbalance. A close below this new week opening gap and below this buy side imbalance, that is going to be more meaningful. If that happens, then we are likely to go back lower down here. At the minute, like I said, I want to see more information, but I still favor the buy side above these highs up here. I just think it's too clean with that volume imbalance above. And I don't think that the dollar index should be going higher as it is at the minute. So again, I just want to sit on my hands and wait for more information. The consequent encroachment of this wick is an area that I'm looking at because it's the discount end of the buy side imbalance over here, and it's also the premium end of this new week opening up. So this green dotted line thingy over here, right? I don't want to see that breached. If that does get breached and we close below it, then that for me is like sort of the line in the sand. We can come back down as far as that, reject it, and then continue higher. That is what I would favour. On the weekly time frame, again, this is why I don't think it's enough to say we've turned a corner, because we just come into this balanced price range here. So we've got sell side, buy side, the new week opening up over here. We have closed below this sell side imbalance on the weekly time frame, right? So I want to see if price wants to get back above this weekly balanced price range, and then this will act as an inversion level to again send us higher, back above these highs up here. I'm neutral until I can see us get back above this sell side imbalance, basically. On the British pound, again, same scenario. We're consolidating inside of these two blue lines here. We're a weekly fair value gap. We've come back down to rebalance over here, and we're just consolidating now around this area. So again, we could come back down, touch the discount end, and then continue higher. Why I also like that discount end of that weekly fair value gap, well, the remainder of that weekly fair value gap, is because it's the high of these two up close candles, which is our accumulation block. It sits inside of this buy side imbalance, and we also have these three down close candles, so the high to the open should be sensitive over here as a propulsion block, right? So if we do dip into that and we find support, that should propel us higher back up into this sell side imbalance, and ultimately into the volume imbalance up here. S&P 500. So last week I drew your attention to these two down close candles here as a breaker, and I said we're likely to find this level hold as resistance to send prices lower, potentially back down into this purple shaded area, which is our weekly balanced price range. We have a smaller buy side imbalance over here, right? So we may want to come down, just touch the premium end and potentially continue higher, or we may want to go back down, potentially find IOFED over here, maybe a consequent encroachment of this area, and then potentially you again run higher. I don't want to call the top at the minute, so I still think I favor higher prices. If the dollar does in fact go lower, then we should see the stock indices really push higher for the buy side liquidity above these highs up here. Nasdaq, again, same thing I said, we were likely to come up, take the buy side above these equal highs up here, and this red shaded area again is its weekly breaker. We have rejected from that level and come back lower. Again, today we have traveled lower. I think we've completely rebalanced this buy side imbalance over here. I think we may potentially find support again on this balanced price range. So we've got buy side, sell side, and then back through with buy side delivery. The premium end might find support and then again potentially continue higher for the highs up here. Unless we get back below this weekly balanced price range, we are still looking for higher prices. If we break below it on a closing basis, I'm looking at this volume imbalance over here to see if we want to come up into that level, which also overlaps with the discount end of that balanced price range, and that potentially will hold as an inverse level and send us lower into this buy side imbalance over here. As a little bonus here, why have we seen such an explosive move in the Nasdaq? Like, I've had a few people questioning, like, we were supposed to see a risk-off environment coming into April, right? Where we see higher prices on the dollar index and lower prices on stocks. Market structure wasn't showing us that we were going to go any lower. When we have a case where a market isn't following its seasonal tendency, that is when we are likely to see a mega trade play out, right? It's in ICT's core content, and I went over that many years ago, but I have seen this pan out over the last few years where if market structure isn't in line with what the seasonal is likely to do, we usually do see an explosive move, and we can see that here with Nasdaq. Instead of going lower during April and May, we really had an explosive move higher to attack the buy side up here. Moving on, Bitcoin and Ethereum. So again, last week I was drawing your attention to these equal highs up here, and I said retail are going to look at this as support and resistance. I'd rather see it dig deeper into this buy side imbalance and into these down close candles over here. The line in the sand was the mean threshold of these three consecutive down close candles, and as you can see, we dipped back below, which retail would see as support. We had our order block over here, we had our propulsion block over here, so the open to the high is going to be sensitive, especially when it overlaps with this buy side imbalance, and we have this low, high, lower, low, so we have this last up close candle. So again, from the close to the high, we extend that out in time, so we found a lot of support over here, and we had a real explosive move higher, back above this high, and touched the discount end of that fair value gap that I drew your attention to last week, right? So this is the 9th of May. We haven't seen Ethereum move higher yet up into this area, so the strength leader here is in Bitcoin. We have this balanced price range that we again ran through, so for me this is quite significant. I want to now see this level hold as an inverse level and act as support if we do come back down into it. We have these two down close candles. Opening of this down close candle sits around consequent encroachment. So if we come back down, I want to see consequent encroachment in these two down close candles offer support to potentially send us higher. I think we do have the legs to get up into 34, maybe 35k. If we get back above this level again, then that does bode well for higher prices. With Bitcoin dominance higher at the minute, I mean, I don't need to see, obviously, a Bitcoin dominance chart. I can see the Bitcoin clearly here is the relative strength leader. So we can employ the Six Sister approach over here, where Ethereum should go higher in sympathy with Bitcoin, right? So we have seen this sell side taken into these two down close candles inside of this buy side imbalance, and we've seen a move away from that. A lot of equal highs up here. So I potentially think that we've had sell side delivery here, buy side delivery here. This is a balanced price range. I don't think we should need to go back below it. I want to see Ethereum go higher and move deeper into its sell side imbalance up here, right? Again, I'm not an expert with crypto. I'm just giving you my thoughts on it because I don't know how many of you here actually trade crypto, but I do get a lot of questions about what my opinion is on Bitcoin and Ethereum. And again, like I say, this is not financial advice, so please don't throw everything you have into the crypto market. I was asked, why is Bitcoin moving? I don't know, if I'm being honest. I will say this though. Growing up, I wasn't in, how do I say, I didn't hang around with the most law-abiding people in the world. It's just where I grew up from. And I have still a few friends in the industry, and one of them just recently reached out to me asking me that, you know, he has a lot of cash and central bank digital currencies are going to come out soon, and he wants to move all this cash into Bitcoin, which made me sort of think about it. And I was like, well, there's a lot of criminals out there who have a lot of money, and when central bank digital currencies hit, they're going to need a storehouse for the cash that they've got. Whether this is a plan to get all the criminals to put their money into like crypto and Bitcoin and then tank the market so it takes them out of the game, it could be, I don't know. Or is that going to cause Bitcoin to rally? The underworld has always found a way, from my experience anyway. So is that a catalyst to why we're seeing Bitcoin move higher? Because of central bank digital currencies looming? It's possible. I don't even know why I shared that, but I found it interesting. Anyway, gold. So I had somebody ask a question on gold. Now, we were calling higher prices when we came down here. I explained all of the reasons why we were likely to see a run higher. I still think the equal highs up here is a likely draw. I'm currently looking at this balanced price range over here. So again, sell side delivery, buy side delivery. We've already had buy side delivery here as well. So I want to see this area hold a support and then move higher back above these highs. If we get back below this, then the lows down here are likely, right? So let's take a look at euro dollar. So this is last week's price action on the hourly time frame. To quickly run through some of these levels, these two blue lines over here is the 4-hour fair value gap, right? There's no imbalance on the daily time frame, so we have to refine that by coming down into a 4-hour time frame, and you can see the imbalance there. This grey area is a daily fair value gap, so we've got the premium, the consequent encroachment, and the discount end over here. That should have been a minus sign. And then we've got these two purple lines here as the weekly balance price range, right? So on Monday, we had very light news. So we were expecting a consolidation on Monday. On Tuesday, we ran above this high over here, leaving these equal highs. So that was a clue of where price was likely to go afterwards. We then take Monday's low and dig into the consequent encroachment of this daily fair value gap and the accumulation block high. I think we just missed that by a couple of pips. Reject from that and then consolidate throughout Tuesday. We left this small buy side imbalance over here and we worked this level a few times. You can see the bodies over here holding a support, which was inside of these down close candles over here. So this is our order block, right? Now, there was a small 5-minute imbalance over here, and I was looking to go long in that small 5-minute imbalance, right? Now, I learned a lesson over here because my limit didn't get tagged and we ran away. And yes, that did sting. But this is a learning experience for me as well, because sometimes if you try to be too precise, you might not get filled, right? My mistake was I should have looked at the hourly fair value gap and I should have seen that price wasn't willing to go below it. And I should have moved my limit just higher up into this area over here. I was trying to be too precise and reduce my risk. And sometimes that happens when you're going to do that. But I learned my lesson on the next trade, which we'll get into in a bit. Anyway, if we take the bodies from Tuesday's high and the bodies from Tuesday's low, and we project deviations higher, we get one deviation takes us up into that 4-hour fair value gap. It's Thursday, and we've come into a 4-hour fair value gap, and we've aligned with a full deviation. This is a very likely area for us to see the high and potentially reverse. Now, I didn't think we were going to go all the way down here on Friday, I must admit, right? I did catch something up here, which we'll get onto in a minute. After we bump into this 4-hour fair value gap and we reject from that, you can see the bodies over there, right? It's really, really nice price action. They're just stopping dead at the discount end of that fair value gap. The wicks are allowed to do the damage, and it can completely rebalances here. We then drop lower below the open of these two up close candles, right? So this is our change in state of delivery. We have now gone from a buy program into a sell program, right? We came back up and had an immediate rebalance over here. So before this candle had printed, this was all just sell side delivery, right? So we opened here, this would have all been a sell side imbalance. We came all the way back up to close that and then rejected and ran lower. So this is a signature that I look for. If price does this, it's in a hurry to reprice either lower or higher. We break structure over here, leaving this fair value gap, which we came back up into to rebalance inside of these consecutive down close candles, which is our breaker. And you can see how price really ran away from there. If we take this low to this high, which was the intermediate term swing, we have a short term high here, we have a short term high here. If we project deviations down, we get 108492, which overlaps with the bodies down here, and that digs into that weekly balance price range as the low of the week. We come off that and have a TGIF trade back into the daily fair value gap, and you can see the price action around the consequent encroachment of that area. Again, if we take the bodies from the bodies high on Tuesday to the bodies low on Tuesday, project deviations downwards, we get 1.25 deviations, which is 0.8439, and we almost nail the low here. The actual low comes in at 1.08441, so just 2 pipettes off the actual low there. Monday, Tuesday was our consolidation. This is our accumulation phase, leaving equal highs up here. On Wednesday, we attack those equal highs with our manipulation leg. On Thursday, we come into a 4-hour time frame PD array, completing the buy program for the week. We then reverse on Thursday and have our distribution leg lower, back below the accumulation phase for Monday and Tuesday. I want to take you into Thursday's price action and get a little bit more detailed in here. So here we have Thursday's price action on the 5-minute chart, and we have our 4-hour fair value gap delineated over here with these 2 blue lines. Between 8 and 12, we have our Asian range. Now, if we take the Asian range low to the Asian range high, and we project deviations upwards, 2 standard deviations takes us to just above the premium end of this 4-hour fair value gap, which is a good target as it is, and we get 1.10119. If we extend these deviations out, you can actually see how we come close to each high that was formed, and we almost get the actual high over here. If we take the deviations lower, we get 0.75 deviations. So again, you can go half, and you can even go half again if you're going onto the lower time frames. So between 0.5 and 1, we get 0.75. You can see how we ran lower. That 0.75 level was also an 800 level as well, right? So we came into that level, clearing the sell side below the Asian range low and into the London session. So this is our Judas swing coming into London. The low comes in at 3 a.m., right? So I use the narrowed kill zone over here, so between 3 a.m. and 4 a.m. is what I'm looking for. We break market structure over here and then come back down into our fair value gap. So this is our silver bullet over here, right? Which also overlaps with these consecutive down close candles as our bullish order block. We also have this high to this low. We come back down around optimal trade entry, and then we really explode higher. If we take this candle's high to this candle's low, it actually should be anchored on this candle, and it's a couple of pipettes higher. I didn't have my glasses on when I was doing this. So from this candle's high to this candle's low, if we extend deviations higher, the actual high should have come in at 1.10122, right? And if we extend that out, the actual high of this candle came in at 1.10123. So we just 1 pipette off the actual high. I am creating the Advanced Market Maker model course, and I'm going to go into a lot more detail with these deviations and stuff. But if I were to explain all the nuts and bolts here, this video would be hours and hours long. It is due to be finished towards the end of July. People who have been in the mentorship for 10 months and who are now chartered will be getting that course for free. Academy students and people who have already purchased the Academy, they will get a discounted price off. I'm not sure what it's going to be yet, but I will knock something off. So yeah, that was a little shameless plug there. Anyway, this deviation up here aligned with the Asian range deviation of 2 standard deviations above the Asian range as well. So we're in close proximity, and we're at a 4-hour higher time frame PD array. So again, a lot of confluence over here, and we almost get very high, a pipette off. We could have had a second entry over here where we have the order block over here. We have our propulsion block. Yes, we wicked into it, but the bodies over here close above the mean threshold of this down close candle. We also have from this low, high, lower low. So this last up close candle here is our bullish break. And we also have this fair value gap over here from this candle's high to this candle's low. So again, this is just our model entry that we've spoken about in the academy, where we're looking for the fair value gap and other arrays to the left-hand side. Price really explodes higher after that, completing its buy program and into our higher time frame level. And it completes the buy program at 7 o'clock, which is the beginning of the New York session, right? So we had the low at 3 a.m. and we had the high at 7 a.m. right? So again, that time is very, very crucial. We drop below the opening price of this up close candle, which is our change in state of delivery, coupled with this fair value gap, makes this a valid order block. Again, with everything that I've already outlined, this is going to be a high probability change in state of delivery, right? We break structure here initially, and this is a better break for me because this is more of a higher time frame break, and we have a close below these levels as well, leaving these two. You would see this as one sell side imbalance if this was a 10-minute chart, because obviously the two candles would merge together. Between 8 and 9, which is again what I teach over here as another silver bullet, we run higher, have institutional order flow entry drill above this candle's high and into these two down close candles, which is our bearish breaker. Why am I looking at this as a bearish breaker? Because this run higher over here is a stop run as well, right? So I'm going to ignore the wick and I'm going to focus on the bodies. So go high, low, higher, high. These two down close candles are the lowest down close in this consolidated range over here, right? At 8:30, we really dig into that and nail this area. Now, we didn't completely fill in this portion of this sell side imbalance because if you see lots of wicks like this inside of a sell side imbalance, this is all the balance price range. So we don't need price to go higher to close this full sell side imbalance over here, right? We also have these down close candles here, here, and these three down close candles over here. Because earlier on in the week I was trying too hard to be too precise, I took an entry over here. So I ended up getting in here just above this candle's high as an institutional order flow entry drill. So at 8:30, as we rallied up into there, I thought that we weren't likely to come here and close it because, again, like I said, I was looking at these wicks over here and how it was a Thursday, change in state of delivery, and we really pushed lower, clearing many layers of sell side. If you ever see price come into a high time frame level and really run lower, taking multiple levels of sell side liquidity, that often is an indication that price is likely to go much lower. Now, as this was running higher, I got a couple of entries as we were just closing in some of this sell side imbalance over here. My stop was above this candle over here. Why? Because this is the higher time frame breaker. So we got this high, low, higher, high. These three down close candles are going to act like the breaker. If you look at the bodies of these candles and you split that in half, we're respecting the mean threshold of this breaker over here. So I didn't want to ideally see price go back above this breaker. So for me, this was a reasonably safe stop because of having all of this narrative and context behind me with the sell side imbalance over here, the wicks over here, and this breaker. And yes, we dug into this area, but we never came and touched my stop. So it was obviously a good place stop. As you can see, my target was hit where I took a partial below this low over here. We had a break in market structure again over here with a close below, leaving this fair value gap. Now, this turns this up here into a breakaway gap because we didn't completely close this sell side imbalance, right? Now, because we have a fair value gap that's lower after another structure break, I don't expect price to come back up into this level now, right? So I'm confident that price shouldn't come back up over here. And with the move that we've already had, we should go lower. And as you can see, price really did run lower. We again had another break below here. This is a more pronounced break than up here, right? Because this was the fulcrum point. We had a short-term low over here and a short-term low over here. So this became an intermediate-term low. If we break an intermediate-term low or an intermediate-term high, that is much more significant, right? So that tells us and paints the picture that price is looking to go lower, especially when we have an imbalance and a close below that low. Right, so we're having all of that over here. Now, admittedly, I was waiting for a return into this fair value gap. And in hindsight, I wish that I took a sell limit over here. But because it was London close and I had to go and pick up the kids from school because dad duties got in the way, I ended up closing all my positions when we got down to, I think it was this deviation over here. So I was looking at 1-2 deviations below the Asian range. So around this level over here. Now, Again, in hindsight, I wish I had put in a limit order over here, but you can see we really came into that nicely between 10 and 11 o'clock. And again, this is another area where you can look for a silver bullet, especially in this case because the fair value gap sits between the 8 till 9 macro, which also overlapped with this down close candle over here. So we had our breaker, high, low, higher high, broke below that, break market structure, closed below fair value gap, optimal trade entry. And we also came into the mean threshold of this down close candle, which is on the left side of the curve, which acts as a distribution block. So the mean threshold, we extend that out, this gets reclaimed and then run lower, and we get the very low at 12 p.m. at the end of London close, right? If we take the low to, it should have been anchored on this high, again, my apologies, and we have one deviation lower, so this is the fulcrum point over here. We almost get the very low over here. If I had extended it out to there, I would have got that probably more precise. The deviation from the Asian range, we got 1.09482, and again, if you extend that out, between these two levels was a good area at the time of day. I think we were just a couple of pipettes off that area. So if we take the central bank dealers range and the Asian range, so the central bank dealers range is from 4 till 8, and then the Asian range is from 8 till 12, so there's a 4-hour window for each of them, and we take the lowest low and the highest high inside of that range, this is known as our flout, right? If we extend the deviations in 50% increments lower, we get 1.09483. And if we extend that out, and my cursor is hovered above this candle, and the actual low comes in at 1.09483. So perfection, right? So there was a lot in this one today. I feel like I've waffled a little bit, but I hope you got something out of this. I know this gets very technical, and for people who are new here, I know a lot of this is probably going to go straight over your heads, but this is where I started. Like, I didn't know. This is me over 5.5 years into using ICT concepts, so you do get better. Anyway, that's prayer time for me, so I will hopefully catch you guys again in the next video. Take care, guys.